In today's rapidly shifting economic landscape, the Consumer Price Index, CPI, emerges as a pivotal gauge of inflationary trends, influencing monetary policies and investment decisions globally. Understanding CPI's movements is essential for grasping the economic health of nations, impacting everything from central bank strategies to individual financial planning. Understanding CPI. The CPI stands as a crucial indicator, measuring the average change over time in the prices paid by consumers for a basket of goods and services. This basket represents a fixed set of products and services, reflecting what typical consumers buy, including food, housing, clothing, transportation, and medical care, ensuring a comprehensive coverage of consumer expenses. Calculating the CPI involves comparing the current prices of this basket to the prices during a base year, offering insights into inflationary pressures and the cost of living. The index is typically normalized to a base year, 100, facilitating easy percentage comparisons over different time periods. For instance, a CPI of 110 implies a 10% increase in the price level compared to the base year. CPI can be presented as a headline figure or stripped of volatile components like food and energy prices to provide the core CPI, offering a clearer view of underlying inflation trends. Policymakers, investors, and economists scrutinize these figures to make informed decisions, as changes in the CPI can signal shifts in economic policies, affect interest rates, and provide guidance for investment strategies in various sectors. This metric not only aids governments and financial institutions in crafting economic policies, but also serves as a vital tool for individuals to understand the purchasing power of their income, ultimately impacting their living standards and financial choices. Global CPI Trends. The CPI serves as a key indicator for assessing inflation and economic stability across the globe. As of February 2024, major economies like the United States and the United Kingdom have shown distinctive trends in their CPI data, reflective of their unique economic conditions. In the United States, the CPI has demonstrated a nuanced trajectory. As of February 2024, the CPI rose by 0.4% on a seasonally adjusted basis, marking a subtle but significant indicator of economic activity and inflationary pressures. Over the past 12 months, the All Items Index increased by 3.2%, not seasonally adjusted. The breakdown reveals varied inflation experiences across sectors. For instance, while food prices saw a moderate increase of 2.2%, energy prices experienced a decline of 1.9%. A notable detail is the Shelter Index, which rose by 5.7%, signaling a significant pressure point in the American cost of living. Turning to the United Kingdom, the CPIH, which includes owner-occupiers' housing costs, increased by 3.8% in the 12 months to February 2024. This figure marks a decrease from the previous month and a significant drop from the peak observed in late 2022. The easing of inflation is partly attributed to the price dynamics in food and non-alcoholic beverages, alongside housing and household services. Particularly, the owner-occupiers' housing costs have been a driving factor, recording a notable increase. These figures underscore a global environment where inflationary pressures remain, albeit with regional variations. Investors and policymakers are particularly attuned to these trends, as they have direct implications for interest rate decisions, monetary policy, and investment strategies. In both the US and the UK, the nuanced details of the CPI data shed light on the underlying economic currents, offering essential insights for stakeholders navigating the complex global financial landscape. Detailed analysis of current CPI data. The recent CPI data from major economies like the US and the UK offers a granular view of the current economic landscape, highlighting sector-specific trends and the factors driving these changes. In the US, the CPI for all items increased by 3.2% over the year, with notable variations across different sectors. Food prices rose by 2.2%, with a more pronounced increase of 4.5% in food away from home, indicating a steeper price rise in the restaurant sector compared to groceries. In contrast, energy prices saw a decline of 1.9%, with gasoline prices dropping by 3.9% and natural gas plummeting by 8.8%. However, the shelter index surged by 5.7%, reflecting a significant cost pressure in the housing market, which could influence consumer spending patterns and housing affordability. The core CPI, which excludes volatile food and energy prices, rose by 3.8%, pointing to underlying inflationary pressures. Within this, the Medical Care Services Index saw only a 1.1% increase, suggesting some stability in healthcare costs. However, transportation services skyrocketed by 9.9%, driven by a staggering 20.6% increase in motor vehicle insurance, reflecting rising costs in the transportation sector. Turning to the UK, the overall CPIH increased by 3.8% year-on-year. A significant factor here is the owner-occupiers' housing costs, which soared by 6.0%, marking a key driver of the overall CPIH increase. This reflects the mounting pressures in the housing sector, which could have broader economic implications, affecting consumer spending and saving behaviours. Food and non-alcoholic beverages prices rose by 5.0%, showing a slowdown from previous months, yet indicating continued pressure on consumer budgets. Interestingly, the rate for restaurants and hotels slowed to 6.0%, suggesting a deceleration in service sector inflation. Expert opinions and analysis. Economists and analysts have been closely examining the recent CPI data, offering various insights into its implications for the economy and financial markets. Many emphasize that the current inflation trends, while moderating, still require vigilant monitoring due to their potential impact on consumer purchasing power and investment decisions. Experts point out that the housing sector's persistent inflation, especially evident in the US with a 5.7% increase in the shelter index, raises concerns about affordability and the potential for a cooling real estate market. Analysts suggest this could lead to a recalibration of consumer spending, impacting sectors reliant on discretionary spending. In the UK, the notable rise in owner-occupiers' housing costs is seen as a signal of underlying pressures in the housing market, possibly influencing future monetary policy decisions. Economists argue that while the overall CPIH increase shows a downtrend, the specific spikes in housing costs warrant attention to prevent potential spillover effects on the broader economy. Food price inflation, though decelerating, is still a focal point for analysts, who warn that sustained increases could strain consumer budgets, potentially altering spending patterns and impacting retail and consumer goods sectors. Investment opportunities. Amid the current CPI trends, investors might consider sectors less sensitive to inflationary pressures, like technology, which often demonstrates resilience against inflation. Real estate investment trusts could also be attractive, especially if they focus on sectors like industrial properties, which may benefit from increased demand. Commodities, including precious metals, traditionally serve as hedges against inflation and might present lucrative opportunities. Additionally, sectors like healthcare, which show relative price stability, could offer safer investment avenues. Investors should closely monitor CPI-related shifts, adapting their strategies to leverage sectors poised for growth in an inflationary environment. The CPI serves as a critical barometer for economic health, influencing policy, investment decisions, and personal finance. Understanding its nuances allows for strategic planning and informed investment choices. Stay updated on CPI trends to navigate the complexities of the market and optimize your investment portfolio. Like, share, and subscribe for more insightful analyses on economic indicators.